Hey everyone, and welcome back to another one of our Mortgage Minutes, where we are chatting with one of my most favorite lenders, Corey Martens. Corey, thank you so much for joining with us again. It's always a pleasure to have you come and share your wisdom and your knowledge with all of my clients, with all of our friends, our mutual clients, and with just the marketplace in general. So thank you so much for joining for another one of these.
Thank you, Katie. It's always so much fun to be on here with you. You kind of make it a little bit enjoyable.
Well, I'm glad to hear you say that, because most people don't actually like getting on the camera and doing this, and so it's kind of fun to get to do it.
Yeah, normally I don't, but with you it is fun. It's relaxed and enjoyable and really informative.
Good. Yeah, you guys out there and watching this video have no idea like what the behind the scenes look like and how much shenanigans happen. So in between like all this, you only get the sort of good cuts.
Right.
But we're glad to have Corey back again today. So we're going to talk about something that I think is just kind of, it's always going to be a topic of conversation. And that's going to be our down payment options. And there's lots of old wisdom, there's lots of new wisdom, there's lots of ways to purchase real estate. And one of the biggest conversations around preparing to buy real estate is always that down payment, that down payment for first-time home buyers. What's the best down payment to put down to get the best rates? What's it, all of that kind of stuff. And I think there's a lot of folklore out there, if you will. I remember growing up that, my parents always thought 20% down. You got to put 20% down. That's, got to go conventional. You got to go 20% down. That's the way you buy real estate. Mm-hmm. And there's a lot of financial people that will also tell you the same thing, 20% down, 15-year fixed, and all that kind of stuff. But today we want to talk about the options for people who are looking at purchasing real estate and what those different options might be. So let's kind of launch into that, and I'm thinking let's just kind of start from 0% down and go all the way up to 20%, talk about some of the nuances between the different kinds of mortgages, and we're going to do this as quick and as high level as we can. And if you all have any additional questions or want to delve down into something that Corey says, then we're going to give you all his contact information at the end. So let's start at the beginning, and just because it's the easiest, let's start with VA.
Perfect.
What does VA look like for us?
I was saying, and just to kind of lay out what we're doing, we're going to kind of just touch on some of the most common ones. Yeah. Obviously, there are so many that we aren't going to get into everything.
Yeah.
But yeah, let's go over some of the common ones. And if we start off with an amount of 0% down payment, a lot of people think of VA loans.
Yeah.
They are they're fantastic loans, and 95% of the time, again, just my experience and kind of what I feel, if you qualify for a VA loan, if you're eligible, it's probably going to be the best deal for you strategically.
Yeah.
They're great.
Yeah, and those don't require the veteran who served our country. And by the way, if you qualify for that, thank you for your service. But those do not require the veteran to put any money down. Yeah, that's all part of the loan program. So it's awesome. All right, so then we go into, you don't qualify for VA. What are your options for 0% down?
So 0% down, the other really common one is using down payment assistance. So technically there is down payment required. It's just not necessarily coming from you. It's coming from assistance from the state. There's a lot of pros and cons to these. A lot of people are scared of them because they think it means a higher rate, which is true in some cases, but not all cases. I've had a number of clients that we've used down payment assistance because it got them a better rate and they happen to get some money along with it.
Yeah. All right, I want everybody to hear that. They're not bad things.
No, I mean, it's like we tell everyone.
Yeah.
We tell everyone, what we do is we present you with the pros, we'll present you with the cons, we'll lay it out. And at the end of the day, you're going to make the decision that's right for you. When you know all of the information, you've got all of the facts, it's going to be an easy decision for you.
Yeah. Now, are those loan payment assistance programs, are they all FHA loans, or are some of them different?
No, they're FHA or conventional. Actually, do you know what? They're also VA. I mean, you can use them on a bunch of different programs and in combination with them.
And is that USDA as well on some of them?
Yep. Mm-hmm.
Yeah.
Yeah,
Okay.
I didn't know if we were going into USDA, so I thought that.
I'm going to throw it out there so I sound knowledgeable. And if anybody else knows about it and they have questions, they can ask you.
No, absolutely, absolutely. No, but yeah, just depending on the program that we find right for you in combination with or without a down payment assistance program, it's incredible. But yeah, you can do something like take a VA loan. And if you need to make an offer above asking price and worried about the appraisal, we could, you can do zero down on the VA and use the down payment assistance to help cover whatever else we need.
Awesome. Awesome. Okay. So let's move up. Now, what's from zero? What's our next option up as far as down payment?
I'm actually going to skip one because generally speaking, people think of the FHA, and that's where we're going to go next.
Okay. Perfect.
FHA is 3.5% down payment.
Okay.
For the most part, with FHA, there's not a big difference whether you do 3% down payment, 10%, 20%, or 50%. There are some small differences, and we would certainly get into those. But for the most part, they're not going to be significant differences. So when we go FHA, a lot of times we do go with that minimum because people find better strategic uses for the rest of their funds if they have more.
Okay. Awesome. Awesome. Okay. So then let's switch over to a regular conventional. What options do we have in regular conventional loans?
So now with conventional, there's going to be two minimums we talk about. First-time home buyer, and I'm going to do a little aside here, okay?
Okay.
First-time home buyer doesn't necessarily mean you've never owned a home. I mean, logically, you would think that's what it means, right?
Right.
But for the most part, first-time home buyer means you haven't owned a property in 3 years.
Okay.
Okay. And if that's the case, there are programs that will allow you in with 3% down payment. Okay. Now, if you have, if you're a homeowner or have owned a home in the last 3 years, we're going to be looking at a minimum of 5% down payment. Okay. Now with conventional, it does make a more substantial difference the amount you bring in. Okay. And generally speaking, it's going to be in increments of 5%. So when we get to 10%, your rates are going to improve and your mortgage insurance rates are going to improve. Again, at 15%, and then at 20, we've got a really nice benchmark because rates have continued to improve, but now we don't have to pay mortgage insurance.
Right.
And it'll continue even at 25 or 30%, your rates will continue to get better.
Awesome. Awesome. Okay, so one last question for you. Let's talk to our investors for just a second. So let's say we're purchasing an investment property or a second home or something to that effect. That's not going to be our primary residence. What qualifications do we have to meet? What down payment requirements are for those? Because it's a little bit of a different animal.
Yeah. So again, I'm going to go with general rules, and I like to say 20%. Okay, because it is different. However, and when able to, I love 25%, because especially on investment homes, that 5% difference makes a substantial difference on how your loan's going to look as far as rate and things like that.
Fantastic.
It makes a good difference, that extra 5.
Yeah. Okay. This has been such great information. Okay. So Corey, I'm going to just recommend to everybody who's watched this, if you have any questions or you want to see what works out best for you, if you're an investor and you're thinking about, like, how do I put this package together? How do we make this a part of my investment portfolio? Wherever you are on that spectrum of buying, I would like them to have an additional conversation with you or their lender of choice. Of course, I think that you are a fantastic resource, so I'm going to plug you here for just a second. But how would be the best way for them to get in touch with you so that they could ask their follow-up questions and maybe get more personalized information on this one?
You bet. I'm going to give you my number, but I'm also going to throw a little curveball at you, Katie, and I'm going to offer one more piece of advice too, Kate.
Yes,
I think it's important. But yeah, let me give you my number, and feel free to reach out to me on my cell phone if you need to. It's an out-of-state number, but I am local. My office is in Chandler.
Yes.
But my number is 406-314-0962. And then I'm going to throw out this tidbit, okay? Because I have a lot of people that come to us, and let's just say they've got $50,000, and they don't want to use $50,000. What they have this tendency of doing is thinking that they'll just tell us that they got $10,000 because that way I won't be tempted to make them use the other 40. Okay, because let's face it, it's a lot easier for me to get you a mortgage if I've got more money than not.
Right.
But with a good lender, we're not in it to find the easy path. We're in it to find the right path.
Right.
And I tell people is, if you're speaking to a lender you trust, tell them all of your resources. We aren't going to make you use them, but what we're going to do is present you with a lot more options.
Yes.
It's like walking into, I use the analogy all the time of Baskin Robbins. It's a lot more likely you're going to find a flavor you really like if there's 31 to choose from. At the end of the day, you might still choose vanilla, but you get to make the choice. You're in control, and who knows, maybe you're going to find some crazy cotton candy flavor that you're like, yeah, on second thought, I do want to do that.
Unicorn sprinkle.
There it is.
Oh, Corey, no, I think that's wonderful advice. I mean, we want to express to you, our friends, our clients, those who are watching this video, we're here to be your advisors. We're here to be your resources. We're not going to, I mean, I'm never going to take you to a home and say, you have to buy this home any more than Corey's going to say, this is the only loan program that, is the right one for you. We're going to present you all of the available options, and then you get to choose for yourself. So that's what a good advisor, that's what a good resource is going to do. We're going to point out the pros and the cons, and then at the end of the day, it's your boat to steer.
Yeah, exactly.
Your money to spend, absolutely. So Corey, one more time, really quick, throw out your cell phone for him again, since we just
all right.
Longer.
So the number is 406-314-0962.
Awesome. Okay, and of course, if you didn't write it down fast enough, you can always head over to our website, which is www.living48realestate.com. And just in case you guys didn't know, Arizona is the 48th state. That is where we got our name from. You're living in the 48th state. So Living 48 Real Estate here. All right. Yeah. It's funny how many questions I get about that. So just thought I'd throw that in there for you. All right, Corey, thank you so much for joining us for another Mortgage Minute here. And
it's always fun. I sure appreciate it.
Thank you. Okay, everybody, we'll catch you on our next video. Thanks for watching.